welcome to today's video, which is called FOMC was bullish, I told you so. I hope you listened and profited greatly on yesterday's video, on yesterday's article, on yesterday's premium calls issued to clients. There was so much price action, and you should remember the pre-market situation, the way it stood at the moment. Range, retest of the lower border, basing, preparing, and you of course remember one of my closing tweets yesterday when I congratulated everyone to the smashing profits that they had achieved in whatever index they chose to trade, and I reiterated my call that Powell was to err slightly on the dovish side, not to play up inflation worries, and within the dot plot bring up 2 rate cuts. Of course, as well, the perspectives of voting members got more closely aligned to each other, meaning a lot of general uncertainty about rate cut prospects going forward had been removed, and as well, during the conference, the QT, quantitative tightening, had been addressed, very positively addressed if you look at the indices that I will be covering further on, and especially financials. Thank you for liking these videos and subscribing to the channel. It helps greatly, and you will be notified if you click the bell of new content whenever it goes up. It's very time sensitive, and the sooner you get it, the more you benefit. Here we are, today pre-market. Flush, hip flush. Does it make you worried? Well, I have an opinion or two to share, and I had issued an update for swing trading clients, and of course in the intraday channel for equities as well. Let's give this chart somewhat more color, and let's draw resistances and supports. You can see that this was quite a perfect test of the pre-FOMC level, so we got a full 100% retracement. 5715 is the middle one, and I do look forward for it being overcome, and I do not think we will have to wait too much time, and I'm not counting on any meaningful breakdown well below the consolidation range of yesterday. I don't think so that would play out. That's not my base case scenario. But of course, we as traders and investors have to be prepared for every eventuality. So, 5688, meaning approximately those 5690 level, 90ish that I was eyeing, did hold as support today, and the uppermost 15760s, low 60s, had not been overcome. Is it justified? Is it not? If I were to pick and introduce you to one single thing from yesterday's FOMC, it would be the QT, quantitative tightening, pace being lowered from 25 billion to 5 billion only monthly. That's 80% reduction. So it means that yields would go down. And this is positive for equities. You remember me talking for months the equity risk premium, and this is great for banking institutions, also for brokerages, that they had been held up really well yesterday, but I still somewhat prefer more JPMs, Goldman Sachs, and even regionals. They are not having a bad look, their charts. So this is great for their balance sheets, as those treasuries sitting there would appreciate. So here we go. Once more, on my Twitter feed I had already pointed out this pre-market flush that undoubtedly did shake off quite a few weak hands. But that's no problem for clients, for all clients, whether swing or intraday, who had cashed yesterday's profits already well above 5,726 area. So they had been having those gains protected, and now this flush has been in longer term perspective definitely a buying opportunity. One more look at the daily sectoral overview. You can see that it is clearly very much risk on. Reminder as to yesterday's video where I had talked the 5-day perspective and how the sectoral view had improved, meaning that what started as a short squeeze morphed into an oversold bounce, and increasingly, well over 24 hours ago, I had talked that this is a very serious bottoming progress on the bottoming path being made. And what did I support it with? Very bullish reaction Friday, rejecting essentially the stagflationary impact of incoming data, which is very positive whenever market denies the quite standard and logical explanation with the oof, let's get over it, let's get it done, let's get it over and done with, we can just go on. It's good that it hadn't been worse, and let's rally. And you can see clear inflow of buying orders, rising volume, little retracements on even 5-minute candlesticks, just as we had seen Friday. So these are very powerful reversals on a daily basis, and if they prove some staying power the way they did at the beginning of this week, then it's only reasonable to interpret it as more than just a short squeeze. That was the 5-day sectoral view that led me to that conclusion, and one of the final charts, there is one more, or actually two more, financials. You see how greatly they did benefit yesterday, and this is the chart of a sectoral leader. Nasdaq, I had not been, and I am not as much bullish as S&P 500 itself. Tech is going to underperform. However, there is a message that industrials, Dow Jones, are telling us. So that will be a topic for one of the following videos, but clients will already know what that means. My joint page to help you select what's right for you based on what and how you trade. Thanks for liking these videos. My trading story, obligatory disclaimer, and talk soon again.